Hello, everyone, and welcome into crushthestreet.com. I have a returning guest on the line with me today, someone who I'm always honored to interview and just pick his brain. And it's John Rubino of dollarcollapse.com. Get over to Dollar Collapse, visit the blog, and you won't be disappointed. And I think you're going to get a great interview here with John. John, thank you so much for coming on the show with me today.
Good to talk to you again, Kenneth. Where should we start in this world? There's awful lot to talk about.
I know, it really is. I mean, I watched the debate this week, the explosive divisiveness going on with that. Trump just announced that he has COVID, and obviously the implications, the political divide, people attacking him for calling it a hoax and not wearing masks, and then, all of that surrounds the lockdowns, what the governors are doing, state by state. And my goodness, the riots in the streets, the lockdowns, the government stimulus, it's just all intertwined. I mean, it really has become a movie, if you will, that's playing out before our eyes. This is 2020. So maybe just some initial thoughts on where we are in 2020 as it pertains to the world as we have it at the moment.
Well, I think you can summarize all this as just chaos. There are so many things happening that are potentially consequential and potentially dangerous. And that they're all happening at once means nobody can figure out what's going on right now. And remember, that's, we've got the pandemic and we've got politics, but we've also got finance in this, which is maybe the biggest source of instability going forward, because the governments of the world have no choice right now but to basically bail out everybody in sight. In the US, for instance, you've got the airlines talking about laying off 25 or 30,000 people. But if they get a bailout, they won't do it. And we've got state and local governments doing the same thing with cops and firefighters. They're going broke in the pandemic lockdown, and they're going to have to lay off all these essential service personnel. But they won't do it if they get a big bailout. So, the pressure on the federal government to bail these guys out is going to become impossible to resist at some point. They're already talking about, Nancy Pelosi just came out and said, everybody relax, a stimulus deal is imminent. So they're going to come out with another, trillion plus, possibly even more than that, basically creation of new money and which they dump in the system. This alone is potentially destabilizing. And if you combine it with all the other stuff, 2021 could actually be worse and make more chaotic than 2020 has been, which is just an astounding thought when you think about it. Because I think everybody's hoping for the chaos to subside after the election is resolved and after the economy starts to come back and after the pandemic fades. And we may not get that. We may get financial instability because we've taken on tens of trillions of dollars of new debt in like a year and a half, created multiple trillions of dollars of new currency, dumped it into the financial markets, sent stocks to 1999 tech stock bubble valuation levels, sent real estate beyond the, at least in residential real estate, beyond the prices that prevailed at the peak of the real estate bubble in 2006. We've created all these potential sources of financial instability in order to contain the pandemic and the political instability that we've been seeing. And that financial thing is going to come back to bite us at some point. Could easily be next year. We could easily have some kind of a disruption in the bond market or a crash in the stock market, or real estate could roll over. Why are house prices going up right now? In the middle of a recession that has aspects of a depression, you would think real estate, which is the most highly leveraged, most cyclical part of the economy, would be tanking right now, but house prices are soaring. Same thing with stocks. In a recession, stocks go down, but instead, in this one, they went up. We've never seen a financial bubble within a recession before. And the idea that we just kind of smoothly skate out of that into some semblance of normality is probably too much to ask for. So I think what comes in the next year is going to be pretty crazy in maybe a different way than today's crazy, but it'll be equally disturbing.
Yeah, and it really does feel like the driver for stocks in this financial bubble continues to move. Whereas before you might look at fundamentals or bottom line earnings, but it's a moving target almost that you just have to shift with, because the metrics of the past, if you will, at least in the short term here, are meaningless. Trying to compare what we've seen in 2020, there is no precedence for that.
Yeah, well, taking stocks as just one of many examples of how things have become unprecedented. Yeah, you have valuation levels, especially in big tech, but also in a lot of other sectors that make no sense in the context of a recession. But they do make sense in the context of the Fed creating trillions and trillions of new dollars and just handing it to the banking sector. Because the way our system works is the banks get the money. They then give that money to their favored customers, who are basically the 1%. The 1% then have all this cheap money sitting around they've got to do something with, but they already have a yacht. They already have a private jet. They already have several big houses. So what do? They buy stocks. They just throw that money at big tech stocks, which have been going up. And so you exacerbate the the valuation imbalances that are already in the stock market. And you also exacerbate the inequality in our current system because, think about how this works. When you feed a lot more money into the stock market, that enriches the already rich because they own most stocks. At the same time, the economy is just flatlining, and you've got people being laid off in basically every major industry right now, with a couple of minor exceptions like e-commerce and stuff like that. So the poor are getting poorer at the same time the rich are getting richer. And that explains a lot of the civil unrest that we're seeing now. The immediate cause is all these horrendous police brutality videos that are coming out. But the underlying cause is that huge sections of society feel like they're being screwed over by the system right now. And they're angry and they're looking for an excuse to express that anger. So, many things could have come along to set this off. It just so happened that it was these videos. And before we can go back to quote unquote normal, we have to address this inequality. You can't have a tiny aristocracy running a big country for the benefit of the aristocracy alone, without the peasants grabbing their pitchforks and doing something about it. So unless we want some kind of a French Revolution scenario to take place here, hopefully, with just financial decapitation and not physical decapitation, we really need to do something about this in a hurry. And, a big part of Donald Trump's presidency, the reason he's president, is because he spoke to these concerns. He stood up in front of laid off factory workers and said, we'll get your jobs back from China, and from people who feel like they're suffering from unfair competition from illegal immigrants. And he said, we'll build that wall, we'll stop the immigration tsunami from swamping you. And people voted for him based on that. Now that proves that there's a political market for populism now. And the same thing with Bernie Sanders on the left. He got what, 1/3 or more of the Democrat vote in these just completed primaries, which means that left-wing populism is also very popular, along with right-wing populism. And the unifying thread of left and right populism is the point that there's a tiny group of elites who have taken over the system, and they're basically bleeding the rest of us dry. So we've got to do something about it. So on the political side, the financial side is liable to be just chaotic because we've got all these wildly overvalued assets out there, and wild overvaluation tends to be resolved eventually, with those assets going back to their intrinsic value or below. Usually bear markets overshoot to the downside. And then on the political side, if Trump gets replaced this time around, all that means is that the Republicans will take a more presentable version of Trump and run him next time. Somebody who says a lot of the same things but doesn't antagonize everybody in sight. And the Democrats will be disgusted by having another set of corporate Democrats in charge for 4 years. So the left wing of the Democratic Party will take a younger, also more presentable version of Bernie Sanders and run him. And one of those guys will win, and we'll have, everything that flows from a populist takeover of the government. So this is nowhere near ending. We've got different stages of chaos coming that will last through at least 2021 and maybe through an entire election cycle and beyond. So I don't know. From a gold bug standpoint, this is paradise because chaos leads people to want safety, and gold and silver are the investments that you go to in times like that. But from any other point of view, this is not a fun time to be an American. This is a really scary time. For instance, I took a bus to the Seattle airport. So two stories related to this. And one story was that the bus went through downtown Seattle at 10:30 on a weekday. And it looked like a ghost town. It looked like a post-apocalypse movie set. There were just rows, whole blocks of stores that were closed, and just the occasional homeless person shambling along in front of them. And then my wife and I are moving some stuff from Idaho to where we are now in northern Washington. And I rented a U-Haul, and they offered me a bunch of money off the U-Haul price if I would return the U-Haul to around Seattle, because that's where everybody wants U-Haul trucks, because they're all moving out, so the demand for moving services is huge in these cities now. We've got this mass exodus of badly run big cities in which there's still civil unrest, 2 months now after it started, and which the pandemic has shut down in any event. So this is just crazy stuff. Nobody could have predicted this combination of problems 2 years ago. It was easy to predict that conceptually lots of problems were coming, but this particular combination is really unique and really unexpected. And that means we just don't know how we're going to get out of it.
Why I was talking to my mom about their move. They're looking to move out of California as well, move closer to us here in Texas. And they were looking at the U-Haul situation too. And if they rent a U-Haul from Vegas, it's a lot cheaper than renting it from where they are in the LA area. Because again, going back to what you're saying, there's a huge demand of people who want U-Hauls in the cities. So it's one of those crazy dynamics, and it's sure playing out right in front of us. Now, going back to the underlying fundamentals, you talked about the inequity, the imbalances, where the enriched were enriched even more, and then you have the poor who have, on paper, done okay in certain situations where they've been getting these $600 additional unemployment checks, these $1,200 stimulus checks, and so they seem like it's okay. But if they don't have a job and their unemployment's running out, that's where we're seeing things start to falter. The rent moratorium starting to end, their income collapsing. And we're starting to see that with some of the economic statistics. So is that going to hurt the rich who have been enriched, do you think? Or is inflation enough to continue to keep asset prices high, like real estate, like stocks, even though, the middle class, which is the driver for a lot of this, is running into some harder times?
Well, yeah, for a while there were, consumer spending held up because the government was just making new money out of thin air and giving it to people, and people were spending it. A lot of that stuff has stopped now, and you're seeing weaker economic statistics come out, like consumer spending, consumer income, employment, things like that aren't as strong as they expected, which it makes sense they wouldn't be, since we stopped giving those guys tons of money to spend. Which means that this negotiating that's been going on between the Republicans and the Democrats over what kind of stimulus bill to have is going to be resolved shortly, because they can't let a new downturn start where people start getting laid off, which is already happening on a vast scale, and unemployment starts spiking. Nobody can accept that, who's in power right now. So they will come up with some kind of a new big stimulus plan, a big part of it will flow to state and local governments to keep them from having to lay off cops and teachers and librarians and firefighters. But also a big part of it will just go straight out to people, which, yeah, I mean, you can keep the economy going for a while like that, but it shifts the pressure over to the currency, because at some point, the supply of new dollars is going to affect the value of the dollar. And once the dollar starts falling, governments lose their tools for manipulating the economy, because if the dollars you're creating and handing to people start to lose value at an accelerating rate, those people don't want that stuff anymore. And they'll just, as soon as they get it, they'll just convert it into real things. The price of real things will spike. And then you'll have the kind of instability that we haven't seen for a long time, which is inflation, soaring prices. And at that point, there's no way out, because the only way to resolve spiking inflation is with higher interest rates and tighter money. In other words, the government would have to raise taxes, the Fed would have to raise interest rates. And you can't do that now because there's so much debt out there that would bankrupt all the borrowers. Everybody who has any kind of a variable rate loan or a short-term loan that has to be rolled over would be absolutely wiped out by a spike in interest rates back to what it would take to slow down increasing inflation. And we did this in the 1970s. We had spiking inflation, and the government addressed it by raising interest rates to pretty close to 20%. So could you imagine what would happen if mortgages went up to 16% and personal loans were 18% and government bonds were 60? It would bankrupt such a huge part of the, especially the leverage speculating community, but also the whole rest of the financial system. We got away with it back in the 1970s and early 80s because we were in pretty good financial shape then. We didn't have that much debt, and the system could handle high interest rates. But now we are just the most highly leveraged society that's ever existed. So we can never raise interest rates again. So think about what that means. We're engineering higher inflation with no tools with which to deal with that higher inflation. And that could be the story of 2021. Already some prices are starting to pick up that are outside of the financial asset realm. And if we see that continue, gold is a kind of a symbol of that. Gold is up from what, 1,200 3 or 4 years ago to about 1,900 right now. And it was briefly above 2,000. Well, that's a signal that money is flowing out of other kinds of financial assets and into real assets like gold and silver. It means people are nervous about what's happening with the currency. And they're going to be even more nervous if the Fed succeeds in getting inflation up to 3 or 4%, which is now its stated goal. And once that becomes a reality, once people notice in their personal lives that the price of everything they're trying to buy is going way up, they're going to be spooked and they're going to act accordingly. And so that's probably the next stage of this whole process. Maybe we get a cure or a vaccine or herd immunity or whatever, and that takes care of the COVID-19 pandemic. And maybe the election goes more smoothly than most people seem to expect it to go. And we get a fairly settled federal government next year. And even so, we still got to deal with the consequences of higher inflation and soaring debt. And historically, those things are resolved either through a gigantic collapse in which the debt goes away through default and unemployment, or a accelerating inflation, which the debt goes away in real terms because the currency is so much less valuable. And that's the choice we're going to have to make at some point. It looks like we've chosen the inflation route, which again is great for precious metals, but bad for most other things. Maybe your house goes up in value in an aggressively inflating financial system, but it won't go up enough to offset the decline in the value of your bank account and the dollars in your wallet and under your mattress. So it's still not a good deal. And it won't be a good deal for very many people if it plays out that way.
John, it's an interesting thing, this concept of stability of your wealth, stability of the currency, because I would say, just looking this week with what we've seen in stocks, or, last month with what we've seen in tech stocks and the volatility, people see that and they go, well, I don't think many people understand that it's a function of trillions of dollars being pumped in the system. And it's almost like a dollar collapse that's sending these stocks higher. And same thing with what's going on with precious metals. The dollar priced in gold it's been a real rough year for it, but they see gold, swiftly move down below 1900, and that instills fear that gold is volatile. Whereas the dollar, even though people understand that it slowly declines over time, I don't think they feel that there's that volatility with the currency the way there are with asset classes like gold and silver, like the stock market, or cryptocurrencies, or some of these other asset classes out there. So maybe just speak to that, if you would. I mean, the idea that the dollar seems like the safe haven, even though it's really not.
Well, yeah, the dollar has behaved like a safe haven basically forever, since World War II. But
In the short
lately,
term, though, right? I mean, because
yeah,
over time it's declined.
right. But in the short run, that's where you hide out when other things are behaving in a crazy, inexplicable way. And that is still true, but that's because reported inflation is still, one or just been holding up better than you.
So we just had a brief interruption there. John, if you would, please continue on the dollar and the safe haven status and kind of where you were when we got interrupted.
Okay. Well, the dollar has been holding up better than you would think if you just looked at US numbers. If you looked at the amount of debt that we're taking on, the amount of money we're creating, the level of our interest rates, you'd think this would be a weak currency environment. But we've got a global economy to think about. And to the rest of the world, we still look pretty good because they are in even a bigger mess in a lot of cases. China, Japan, Europe, they all have pretty serious problems of their own. And that makes the dollar an appealing place to hide out because they don't trust their own currencies. But once, let's say the Fed achieves 3 or 4% inflation in the US, then all of a sudden, people who don't understand anything about money will, see their lives getting harder because the price of everything is going up. And then the idea will take hold in the mainstream that now we're in an inflationary economy. And that'll change things dramatically. So yeah, the dollar, it actually is a safe haven asset in terms of other financial assets for now, but that won't last based on the mistakes we're making. And the timing of these things is impossible to predict, but the trends are pretty clear based on the amount of new currency we're creating, the amount of debt we're taking on, and the fact that we're not even going to be able to keep 0% interest rates going forward. When the financial markets flake out because of overvaluation, we're going to have to push interest rates down into negative territory like Europe and Japan have had to do. And when that happens, it's going to be hard to make the case that the dollar is a safe haven anything, that's a place to hide out when it costs you money to hold a dollar balance in your bank account, for instance. And it costs you money to put dollars under your mattress because the dollars themselves are losing value at 3 or 4% a year. At that point, the system will flake out and torrents of money will pour into real assets, things that government can't make more of. We will finally make that distinction between what can be created out of thin air in infinite quantities, like fiat currencies, and what can't, like beachfront property and really high quality stocks that have underlying assets that can't be created out of thin air. In other words, you wouldn't buy bank stocks in an inflationary period, but you would buy gold miners because the gold they have in the ground can't be created by governments on a printing press, and will tend to gain in value as the currency with which we're measuring the value of those reserves goes down in value. So, gold miners will tend to do well. Bank stocks won't. It's not this perfectly easy to understand, clear-cut picture, but more and more people will come to understand it and act accordingly as this goes on.
And it's amazing how it doesn't get priced in immediately, how this realization, all these things you're talking about, could get priced in immediately if it was overly efficient, but it just doesn't happen right away. It's manipulated, it's massaged. The system wants to believe that everything is fine and that Keynesian economics are going to continue to move things along. But you have this situation where I call it $3 to $5 trillion have been created over the last year between, federal and monetary, fiscal and monetary policies. And you have gold, a $10 trillion asset, when you add up all the ounces that have ever been mined over thousands of years. It's taken thousands of years to produce, this $10 trillion asset, whereas the dollar, has been they printed 3 to 5 trillion in the last year. And I just don't understand why it takes so long for that to be priced into our system.
And Kenneth, the $10 trillion for gold that you just quoted is global, whereas the 3 to 5 trillion new increase in U.S. debt is just the U.S. If you take the rest of the world, we're in the tens of trillions of dollars of new currency creation versus this 10 or so trillion dollars worth of gold that exists in the world. So yeah, the imbalance is immense. In fact, I'm in the process of writing a post on dollarcollapse.com about that, because a couple of new banks just came out and recommended gold. When big time mainstream money managers are starting to steer their clients into gold, you have to think about, okay, what would happen if 5% of global investable capital flowed into this market? Is that doable? And so if you look at what else is out there, what could flow into precious metals now that mainstream investment advisors are recommending that people do that, equities are $100 trillion. Bonds are about $250 trillion. Real estate, again, $250 trillion. And just cash on hand is $60 or $70 trillion around the world. So how do you fit 5% of that into a market that is like less than 1% of that total? And the answer is, it's really hard to do, right? If a bunch of money starts flowing out of real estate and stocks and bonds and flowing into gold, it's not clear there's enough physical gold to satisfy that demand. And in any event, the price would have to go way up to satisfy even 1 or 2 percentage points, let alone 5% of global investable capital flowing in. And so that's going to be part of the financial dynamic when all of this stuff starts to actually happen for real. The fact that it's happening gradually should be expected, because we don't change our minds very easily. Human beings, once we get an idea in our head, it takes an awful lot of contrary evidence to move us over to the other side of the argument. And right now what's happening is that people have grown up with a dollar being basically a solid thing to have in the moment, and stocks mostly always going up and house prices always going up. That's normal life for the average adult. They've never seen anything else. So to convince them that all of a sudden this thing that has existed for their entire lifetimes is about to change and is basically about to reverse, that's not easy, but it happens over time, and then it happens very fast. Like the old Ernest Hemingway quote when he was talking to a friend who went bankrupt, and the guy said, well, I went bankrupt slowly at first and then all at once, and that's how it will probably happen in this case, where prices will tick up a little bit and stocks will get really choppy and volatile, and gold will rise, but not spectacularly. And then all of a sudden, all of those things will happen in the space of weeks or months, where gold just goes straight up, stocks just crater, and real estate gets absolutely chaotic, and interest rates start going up, and the Fed can't stop them from going. Stuff like that is going to happen in a time frame that'll seem very quick, but it will actually have been building up for the last 3 or 4 decades. So we're just going to see the resolution. And people will think that that was the whole thing, but really, we're living through a big part of it right now as we build up the pressures that will be released seemingly all at once at some point in the future.
Yeah. And I think it really comes down to the whole system being the skin in the game is for everything to continue as is. You know, the stock market to go up, pension funds to do what they do, Social Security, tax revenues, interest rates, home prices, all of these things. I mean, the solution to buy gold and to watch everything collapse. I mean, that's a big problem for 99% of the world, right? And so, and I think because of that, things are artificially sustained even longer because people are all in on the system. You know, they're not going to jump ship because it's painful.
Oh yeah, none of this is a pleasant prospect for anybody. I mean, even gold bugs. If you're stacking and your gold is getting more valuable and your silver's way up, you still have to live in a world where maybe you can't go downtown because there are riots, or maybe your town is laying off half the workers, so nothing works down there. Nobody picks up the garbage. You end up with a fair bit of money, but living in a third world country. And that's not anything that anybody should hope for, but it does look like what we're heading for. And it's already true for a lot of people right now. There are a lot of cities where life is pretty much like it is in Caracas or someplace where nothing works anymore, and it's scary, and you fear for your own safety, and you can't work productively and make decent money anymore, and that's the kind of thing that feels temporary now because of the pandemic, but might become much longer term when the financial system flakes out. When your city's pension funds go bust and they have no choice but to start laying off the people who basically make the city work, then you're stuck there. You're stuck in a place that doesn't work anymore. And then when the federal government steps in and bails out your city because they, for political reasons, can't stand to see what's happening, then your currency starts to plunge. So your savings, maybe your city starts to work again, but your savings start to collapse in value. And that's going to be kind of the process that plays out almost certainly over the next few years or over the next few months. There's no way to know, but that's kind of what we're looking at. Just because we screwed up our finances, all the rest of this stuff is just background noise, these riots and the political turmoil and the pandemic. That's all stuff that didn't have to happen for the system to collapse for financial reasons at some point in the future. If none of that stuff had happened, we were still looking at huge currency crisis in which the system itself is threatened. And the fact that we have all these other problems just speeds up the process. It makes it more likely to happen next year than 5 years from now than seemed likely a couple of years ago. So, whatever is going to come, it is coming, and it's only a question of the time frame.
In a general sense, I had to reflect on that this year, seeing what happened with the lockdowns in the world we were living in, trillions of dollars. That's a world of $2,000 gold. And we've talked about it before. Would you really want to live in a world of $10,000 gold, $20,000 gold, whatever that number might be? And I had to really reflect this year, driving by, seeing some of my favorite restaurants close down, and, just people fearing for their lives. If I go into downtown Austin, the riots, the homelessness, and seeing what's going on there, or, hesitant to go to different parts of the country just because of all the craziness that's going on, the way I would have freely traveled a year ago. And, not that I'm living an overly fearful life, but I did have to reflect and say, my goodness, this is a different world. And sure, I was prepared for it, but at the same time, it's not the world that I would have chosen, if you will. So maybe just some closing thoughts there, John. Thank you so much for coming on Crush the Street with me today, as always. And then, of course, after you respond, please let everyone know where they can go and what they can find if they visit you at dollarcollapse.com.
Okay. Well, it's important to finish a really gloom and we talk like this with the optimistic aspect of it, which is that this is an investment thesis. There are ways to get rich during chaotic times, and that's our intellectual challenge. How do we set up our finances So we come through this with enough capital to be able to protect ourselves and our family from the rough edges of what they're going to have to live through. And it's fairly clear at this point that that gold and silver are things that you want to own because they will go up in value in dollar terms when everything really hits the fan here. And then beyond that, it gets a little tricky because there's a big short scenario out there, right? Where the financial markets start to collapse one way or another. And by betting against them, you can make a ton of money. You know, if you watched that movie or read the book, The Big Short, you know that a few prescient money managers went again, basically bet against the financial system, and they made epic money. They made life-changing money that made some of them household names now, at least in the financial community. Something like that is coming. So once you've loaded up on gold and silver and you feel like you have enough and it's stored in a very safe place, which is another intellectual challenge there that we could spend a whole show on if we wanted to. Once you've done that, then you can start looking at ways to bet against the financial system. And you know, that's challenging, and the timing of it is a big deal and everything. But if you get it right, you know, and shouldn't do it with the money that you're going to need, but with your speculative money, you have a chance to set up a portfolio of things that won't just do okay, you know, in the coming crisis, but that will go up 10 or 20 times or 30 times. And make you a very rich person. And you know, you're not going to be living in a great world, but at least you'll have the ability to protect yourself. And at least, you know, you'll have the fun of being involved in a market that you've thought about and placed some consequential bets on and have it work out for you. So the way I get through this, because it's easy to just really, you know, immerse yourself in the negativity of all the things that are happening. But the way I get through it is I think, okay, you know, this stuff is happening. How am I going to get rich from it, you know? And how am I going to explain to other people, to my friends and family, how they can do well too? And if you look at it that way, bad things at least have a good side because they benefit some of the bets that you've made. And I think that that's probably as psychologically helpful as it is financially helpful for getting through all this. Now, dollarcollapse.com is a website that I run where, you know, I cover most of this stuff on an ongoing basis. So the idea is that show up there, spend an hour looking at the headline links and maybe some of the things I've just written, and you're kind of up to speed on the dark side of the financial world.
John Rubino, everyone, of dollarcollapse.com. Get over there, visit the website. Thank you so much, John, for coming on the show with me today.
Thanks, Kenneth.